Hello and welcome to Charting the Markets on Monday, the 19th of June 2023. Now, today's Juneteenth Day in the US, and therefore the financial markets are likely to trade in a very quiet and low volatility environment after last week's very positive end to the week, after we saw the likes of the US Fed and the European Central Bank and the Bank of Japan show us their rate decisions, with only the European Central Bank hiking its rates to 3.5%. But this week we've got the European Central Bank, we've got the Bank of England, of course, on Thursday, where we also expect to see another rate hike, taking us probably to 4.75%, and that would be the 13th rate hike in this cycle. So when we have a look at the FTSE 100 daily financial bet, we can see here on this chart, the daily chart, that last week we tried to break through this technical resistance area I've been mentioning for the last couple of weeks and even more, between 7,655 and 7,679, that is to say the mid-May low and the late May highs and early June highs. And we did manage to short-term break through that resistance area and rise to 7,688, but then formed this shooting star, basically a bearish reversal or potentially bearish reversal pattern on the daily chart on the FTSE 100 here. And we basically failed also below the April to June downtrend line, all of which is short-term bearish in my opinion. So today, as I said, not much is likely to happen because the US is shut, and we'll probably have a low volatility trading day. But from a technical perspective, provided we stay below last week's high at 7,688, to me it looks as if the downturn which began in April is more likely to continue than this being a new uptrend at the moment, because we could interpret the bounce off the late May low at 7,433 as just being an Elliott wave A, B, C correction, which is now run its course, in which case we would expect not only a slip through the red line here to take place, which is the 200-day simple moving average at 7,549, but to also take us back down again towards the late May low of 7,433. So what I'm saying is, from a technical perspective, if we see a fall through Friday's lows tomorrow when there's more volume in the markets, or if we were to close below it today, but actually in that case I would also like to see a confirmation of that bearish close tomorrow as well, then basically I would expect further downside to be seen, provided we stay below 7,688. So basically, you know, if you go short, where your stop loss level is if you were to trade this technical setup. If you go to the European markets, you can see that the DAX 40, the German index here, made a new all-time record high on Friday and rose to 16,428 on this daily financial bet. But it is also starting to come off as investors are slightly more cautious, and also on the back of generally weaker Asian markets earlier this morning. And we'll have to see whether we can hold at this May to June uptrend line, which currently comes in at 16,176, and also at the last reaction low, which is last Thursday's low at 16,160. So for me, the line in the sand, technically speaking, 16,160. Why is that the case? Well, basically, if we were to fall through the support line, the last reaction low, in that case, what is likely being seen here is a false breakout to the upside that we made on Friday, meaning that we made a new all-time record high above the previous all-time record high, which was made back in May, but it is then followed by negative follow-through. And you can see here on the lower chart, on the relative strength index, that the high made here, which corresponds to Friday's high, is below that made back in May when we made the May high. So on the price chart, we are making new higher highs, but on the relative strength index at the moment, it looks as if we're making lower highs. And this is called negative divergence. And negative divergence in around 70% of cases does lead to at least a correction of the previous trend, and also sometimes to a reversal of the trend. So it is possible that we could be topping out here, provided we stay below last Friday's high at 16,428 on a daily chart closing basis, and provided we fall through the uptrend line and the last reaction low. So that will be interesting to see whether we will have such a scenario play out in the course of this week. And don't forget, if you look at the rally we saw over the last week, which you can see here was basically just 1 week of very positive sentiment, even though the US Fed did leave its door open for further rate hikes to be seen in July and perhaps even another one later on. And even though the European Central Bank also, in its press conference, Christine Lagarde basically saying that there is still room for a couple more rate hikes in Europe. Despite all of that, markets kept on rising, and they did so at a time when the CNN Fear and Greed Index is now, for the second week in a row, trading in extreme greed levels. And that is normally a contrary indicator telling us that market participants, those who are buying the market, are perhaps buying it because of fear of missing out, and that they're becoming complacent. So in a lot of instances in the past, when the Fear and Greed Index was at an extreme, as it is at the moment, it did lead to a at least short-term correction against the trend, and in this case the trend is up, so the correction would be to the downside. Also, if you look at the CBOE put call ratio, that is also at very low levels, and the same is the case for the volatility index, the VIX, which keeps on trading at pre-COVID levels. So from a sentiment and behavioral finance point of view, we are at a time where potentially we could be forming a top. Even though from a fundamental point of view, nobody seems to be worried at the moment, and risk-on sentiment still seems to be the majority of the play which market participants are looking at, even if today we are starting to slide slightly here. So basically, watch out for these key support levels. As I said, 16,160 for me on the DAX 40. A fall through there could take us back down again towards this key main support area between the May and June lows, between 15,659 and 25. And further upside, however, would be in store if we were to make a new record high above that seen last week on this daily financial bet at 16,428. In the US, the story is quite similar. As I said, US markets are shut today because of Juneteenth, the holiday. But you can see here, we formed this doji on Friday. We made a new 40-month high here. And did so at 4,447. And you can see here that takes us back to levels last traded in April of 2022. And here we are currently falling in the overnight session through Friday's low, which could mean that we could retest the June uptrend line around 4,376. And a fall through there may actually lead to a top forming, at least short term, and perhaps some consolidation taking shape. So interesting to see what's going to happen with regards to the S&P 500 in the course of this week as well. Euro-dollar is very interesting because Euro-dollar rallied last week on the back of the European Central Bank hiking its rates, whereas the Fed skipped a rate hike in its June meeting. And you can see here the impact of that was that the US dollar depreciated very strongly, the euro-dollar rallied, and we went and traded at 109.70, very close to the 109.73 upside target I mentioned over the last week or so, the early April high. And currently we are consolidating below that high. If we were to rise above 109.70, we would then probably retest the 110 area, and then we've got this key resistance area between the mid and late April highs between 110.75 and 95. But short term, we seem to be coming back with regards to euro-dollar and may retest the mid-May high at 109.05 before further upside is being seen on this currency pair. With the Bank of England expected to hike its rates for the 13th time to 4.75% on Thursday this week at its monetary policy meeting, you can see that euro sterling continues to slide. And if I zoom out, euro sterling is now trading at levels last seen back in August of 2022 and is heading down towards the psychological 85 mark. And we can see here that basically, provided we stay below the last reaction highs here, below the mid-June high at 86 and 13, further downside is really in store for this currency pair on this interest rate differential between the European Central Bank, which is still expected to hike once or twice, but also the Bank of England, which might actually hike even more than that going forward. Moving on to cable, on the back of the interest rate hike expectations to do with the Bank of England, you can see here that the British pound is accelerating to the upside versus the US dollar and traded at 128.48 on Friday. That is a level last seen back in April of 2022, and above which we then have nothing much to speak of until the 129.73 April 2022 low. So that would be our next upside target for cable, ahead of the psychological 130 area. But here you can see short term we're just consolidating, nothing much happening. Support is actually quite a long way away now. It's the mid-May high 126.79, but as you can see here, now that we've broken above that high, further upside looks far more likely than any downside in the medium term. The weaker dollar also had an impact on commodities, and we will look at gold in a minute. But first of all, I'd like to start off by having a look at crude oil. And you can see here that WTI has actually bounced off last week, as we expected it to, from its late May low at $67.12, and is now currently retesting its April to June downtrend line, which it also tested on Friday and didn't manage to break through. But perhaps in this low volume environment we find ourselves in today, where there is Juneteenth Day or a holiday in the US, and therefore the markets are shut, spread betting obviously still open, and you can see here that perhaps we could break through that downtrend line and also above the high seen on Friday at $72.02, in which case we would once again be heading back up again towards this upper boundary of a 2-month sideways trading range, and that comes in around $73.82 and $74.70. So that's the key resistance area to look out for, and that's what we're heading back towards once again, having bounced off the previous lows in the course of the last week or so. And let's talk about gold now. As I just said, gold reacted to the weaker dollar at the end of last week. You can see here we did dip down to $1,925 per troy ounce on Thursday, and that was a level last seen back in mid-March of this year. But then on the weaker dollar, the precious metal rallied to this short-term tentative resistance line, which we tried to break through on Friday and doing so again today, but nothing much is really happening here. And basically I would not really look that much at this tentative resistance line or downtrend line, because we haven't had a 3-point touch of the line, which would mean it's a proper downtrend. So what instead I would like to do is look at the last reaction high, which is higher than the previous ones, and that is the 9th of June high at $1,973. So for me, basically, provided we stay below $1,973, it's more likely that we're going to head back down again towards the $1,940 support area, which held for much of late May and June so far, except for that dip lower we did intraday on Friday. Now, last but not least, we can see here that the price of Chicago wheat is exploding to the upside at the moment, and we can see here that from a technical perspective we've broken through a downtrend and are now heading back up again towards the mid-April high at $7.16, and just above there we've got the March high at $7.30. So this is the upside target area for those of you who are long Chicago wheat, and basically we expect further upside to be seen because of this upside acceleration we can make out here on this chart, and support in case of a short-term retracement lower being seen would be the May high at $6.71. But really more upside is probably on the cards on Tuesday when the markets open again, and perhaps if we have it as an overnight session trade, then on the Chicago futures you can probably see on the spread bet that this market is also tradable then today. So further upside likely to be seen here with regards to the price of wheat. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is AxelR_IG.